Welcome back to my channel, and first of all, I wanted to say thank you. I finally broke the 1000 subscriber mark. I uploaded my first video on YouTube back on the 28th of September 2021, and yesterday night I broke the 1000 subscriber mark. In total, I've uploaded 917 videos, a lot of these being shorts, but also pretty consistently every single week uploading a portfolio update video. And originally when I started my content, I did a lot more long form, better edited, kind of more in-depth videos. But recently I've kind of switched everything to focusing mainly on my stock portfolio and providing updates. If anyone has been watching for a long time, you might remember this channel was originally called Business Ventures. And I did love the name, but for SEO reasons, I figured it might be best to try something else. And this year, my goal was to hit that 1000 subscriber mark, which I knew I should be able to hit very soon. I'm very grateful to anyone who's watched my videos or has subscribed across whilst I create this content. Again, I just do this as a fun thing, a bit of a hobby, and to hold myself accountable, especially when it comes to investing and tracking and doing these videos. Overall, I will continue to upload these videos and continue to do these stock portfolio updates, and as I get more time, I hopefully plan to expand the channel and do a bit more different content as well. But today I just wanted to give an overall portfolio update as well, and just say thank you for everyone who's watched. Looking at the portfolio, you can see my portfolios are currently sitting at a combined value of $103,000. That's made up of the $57,238 in my stake portfolio account, and then my $45,847 in my Vanguard account. Between the two accounts, not much has changed in terms of my holdings, but you can see I'm up around 33% or $14,215 in my stake portfolio. Recently, Apple just paid its dividend as well. It was very small, as again, I'm not a dividend investor, but I think it was around $3 something, so any dividends I get, I plan to just reinvest back into my portfolio. Stocks have bounced up a little bit. If you've been looking at the market, it did have a bit of a dip, especially many of the tech stocks, but things are slowly getting a bit more stability. Some of my other positions, such as Costco, really flourished during this time. So whilst a lot of my tech positions were hit, if we have a look at the last month for Costco, it's up 15%. And that's the benefit of diversification. And this is when I wish I still had my JP Morgan position and my Costco position was larger. But overall, going through my portfolio, I think of these short-term volatility as a buying opportunity, which is what I did. I invested more money into Google. Again, Google's had a rough month, down 4%, but I used this time to buy into more shares around this 190 mark. Obviously, it did dip again, which is a bit sad because I could have bought at a cheaper price. But again, I'm trying to keep a long-term outlook. The stock still has had a very good 6 months, up 15%, especially when you consider the S&P is expected to produce around 9 to 10% per annum over an extended period of time. So stocks really have been firing at all cylinders, and it has kind of distorted my image on what I think the return should be on my stocks, but it is nice to sometimes get grounded again and get a bit more of a realistic view on how things should really be trading. And when I look at the S&P 500, VOO is my second biggest holding. It's just fallen behind one of my other Vanguard holdings, but it's sitting at around 17,648 USD, which is around 31.5 shares. And that's trading at $560 a share at the moment and is up 12% in the last 6 months alone. So again, the market is really rallying these last 2.5 years and is up 22% in the last year. So what this means, that I think at least, is we are potentially due for a bit of a market, some people say market correction, but even if it's a bit more stagnant and things kind of trade sideways for a while, I can understand that just because of how strong returns have been recently. My plan and what I think I'll be doing is just continue to do what I'm currently doing, and that's dollar cost averaging into companies that I really believe in. A big goal of mine, especially with my Vanguard portfolio, was to hit the $50,000 mark. The goal was to hit it by the end of March, hopefully. I am a little bit off, so I'm around $4,150 off. But again, as my pay comes in across the month, I think I have another 2-3 pay cycles before the end of the March. I'll continue to invest and hopefully I can hit that $50,000 mark. especially if stocks have traded up a bit. As you can see, VLC is trading at around $86 a share. This stock did dip all the way down to around 82, 83, and has nicely rallied back up, with many of the banks posting their earnings, such as Commonwealth. This has kind of rallied the stock back into where it was previously. My other holding, which is my biggest holding now across both portfolios, is VGS. That's Vanguard's International Shares ETF. This kind of just tracks globally. It's around 1,500 shares, and it holds many of the big giants across the world. So it's mainly in the US, around 75% of exposure, I believe, is in the US, which is good because I believe that's where the most growth is. And that's trading around $144 a share. And it holds many of the big ones such as Apple, Microsoft, Amazon, and Nvidia. While smaller percentages, it does give me some good diversification. Again, going forward, I have got my Excel spreadsheet as well, and I did kind of want to reflect on when I started doing these videos and just kind of show you my progress over this period. So if we have a look, this is my Excel spreadsheet. Again, one day I will make it prettier. But if we go back, we look here, this is obviously 2025. We go back, we got 2024 and then 2023. I obviously started doing these videos back in 2021, so even way further back than this. But I only started tracking them and creating this Excel spreadsheet back in December. I believe that's 2022. So my portfolio back, if you see any of my old videos, sometimes I'll go back and just look at the thumbnail or watch the start of it just to kind of look back at things of how things started. My portfolio was around $10,000, I think, when I did my first video. And now it's obviously grown a lot since then. But one of the good things that I mentioned about doing these videos is it holds me accountable to continue to dollar cost average and continue to invest, because sometimes you'll be putting money in and you won't really see the growth. It's hard when you're consistently putting money in, when you're giving up your buying now to look into the future. So I could be doing something else with that money. I could be going for more travel. I could be buying something else, buying different assets. But when I put it down on the schedule like this, you can kind of see the growth over time, especially in this graph, where you can see things just slowly trading up and up and up across both portfolios, which is exactly what you want to see. Again, since the start of this year, we're only in the middle of February, and things are already up for me around $3,000, or the portfolio value is, which is very good, as hopefully by the end of this year, I ambitiously set the target of 150,000, but I think that's a bit too much, especially if I want to purchase property. So even if it's something like 130,000, I'll be quite happy with that, if it means that I'm using my other money to, like I said, purchase a different asset, such as an investment property or whatever the case is. Looking at the holdings, you can see my American portfolio. Again, 50% of it's in the market tracking ETF and VOO. The other 50% is a bit of fun. That allows me to do my shorts videos. I've been a lot more consistent this last 2 weeks, especially as I was trying to hit the 1,000 subscriber mark. I've been doing 2 shorts a day, so that's been very good for me, and it helps with gaining subscribers and getting more views. And yeah, that other 50% I can kind of play around with. My Australian portfolio in Vanguard is a bit more boring, you might say. Around 64% of it is in the VGS, which tracks the more global international shares, and VLC is around 35%, and that just tracks the largest shares here in Australia. I have briefly mentioned in other videos that if I did want to go for property, if I was to sell out of any shares, it would be probably VLC. Whilst it does pay a good yield, I was looking at it the other day, I think it's around 4%. Again, I'm not a dividend investor, and if I can get better growth elsewhere, again, and diversify, then it's definitely something I'll entertain. Especially here in Australia, you have retirement accounts, and I already do have some exposure to Australian shares in that. So there's a lot of I read about this in my CFA as well, that home kind of town bias, where people are more heavily invested into their own country, even if growth is better elsewhere. So I want to make sure that I'm maximizing capital gains, especially at a young age. I shouldn't be focusing on dividends. I should be focusing on long-term compounding growth, which I think I can potentially get better overseas. But again, I've got nothing against holding some position in Australian shares. Speaking of dividends, I did briefly mention I got a dividend yesterday, I believe, from Apple. Apple paid me around $3 something, so not much at all. But again, any dividends I get, I just reinvest. And my goal for this year was to hit $2,000 in dividends. Obviously, the majority of my dividends will come through my Vanguard account, as that's the bigger payer, and everything of that 2,000 will hopefully, like I said, snowball, and it will get bigger and bigger over time. If I am to sell some of my VLC position, it will obviously mean my dividend will take a hit, but if it means I'm going to get better capital gains, then I'll 100% make that sacrifice. But at the moment, my goal is to hit $2,000 in dividends. Having a quick look back at the portfolios, just kind of wrapping it up, I wanted to again go through my kind of looks with the channel. This was a bit of a different portfolio breakdown compared to normal, just because of the situation with the 1,000 views. What this also means is, again, I took a bit of a break, but now I'm kind of back into the swing of things. I've got a bit more time in my hands now with other stuff in my personal life wrapping up, so I will continue to do these videos, and then hopefully maybe I can even hit that 4,000, because there's another prerequisite you need to hit as a YouTube content creator of around 4,000 hours of watch time, and that's to hit monetization. Again, I never started this channel with the idea of making money of it. I just wanted to hold myself accountable to do, and I kind of enjoyed uploading these videos and connecting with other people. But yeah, that'd be another big goal. And then any money I hopefully get through YouTube, through ads or anything like that, I can reinvest into the portfolio. And that's even more money I can use to speed up the growth and maybe even do better videos for you guys. But that's all for now. Thank you everyone for subscribing or viewing. And that's all, and I'll catch you guys in the next video next week. Cheers.